What is up, everybody? This is the Misfit Happy Hour, the crypto portion. My name's Spencer Riegle, and I have the Opyn team today. So if you guys want to kind of, what is Opyn? Who are you guys? And kind of give a little brief intros on that.
Sure. So my name is Joe Clark. I'm a researcher at Opyn for about a year now. I came from a traditional finance background, trading options for a fund in my native Australia. And I've was always very excited ever since it looked like there was a possibility that we would be able to do TradFi things on chain. I was looking for an opportunity to come over, like many of my colleagues. So it's been a great ride.
And I'm Regan. I recently joined Opyn in May, right after I graduated from USC. And in a similar vein, though, with much less experience, I had kind of tested the waters in TradFi. Up until I actually joined Opyn part-time, I was completely sold on just pursuing my TradFi track with structured products, but just decided I really loved everything about crypto and Web3. And so now with Opyn, I am doing kind of a mix of wearing many different hats from like community and also helping out mostly with product.
Nice. And then in full disclaimer, I also work with the team. I help out with marketing and I help out with kind of community and all those kind of things. So I can speak to the team's intelligence and what they're building, and I'm super excited about everything as well. So I guess what would you guys describe the mission of Opyn to be?
Oh, so sorry, go ahead.
You go, Regan. I don't want to. You got a good one.
No. I was honestly just gonna say, like, I think it's literally right on the Opyn website to build an inclusive, open, and transparent financial system, and so that's hence the name Opyn, right? To be like to really embrace that openness and to give all people, particularly like that's just allowing people to access the financial system, I would say is the mission. But maybe Joe, you can touch on some more if I missed. That was just like the one-liner.
Yeah, that's a brilliant explanation. I think I had a story. There was a story last year I thought was very interesting. The London Metals Exchange cancelled $4 billion of orders in the nickel market. I used to trade a little bit on the London Metals Exchange, and so I knew a little bit about their process. And everyone was extremely surprised by this. No more so than the hedge funds who would have made money off those trades. And what had happened was the Metals Exchange had decided at the end of the day that certain trades were made in error, that they were accidental trades. And this wasn't clear whether it was or not, but there was some very high level discussion, and they decided to wind back trades at the end of the day. And it caused a huge fuss for a large hedge fund called AQR, because they were on the other side of these trades and they felt that it was unfair. If it had gone the other direction, they wouldn't have been able to take it back. And when it happened, I thought, this is why we need DeFi. This is why we need systems where the infrastructure that you're dealing with can be trusted. You're not putting your money with someone in trust and believing that they will act in your interest. You're looking at a piece of code which was developed and has been audited, and you can check and you can change and you can deploy yourself. And what happens in the contract is exactly what it says. I think it's also, the issue with the fact that the London Metals Exchange exists at all and is very protected is another thing that happens in centralized finance, where there's always efficiency to becoming slightly more centralized and becoming slightly bigger. And so you'll tend to have exchanges where it's actually very difficult to trade. To get a seat on the London Metals Exchange is almost impossible. You have to trade through people who you trust and who take a cut on the way through. So I thought that was an interesting. For me, it was like part of the motivation, always dealing with these markets and always being annoyed that there wasn't a way to do this in a more direct, more clear, open, and democratic way.
I think Zero Hedge came out with an article about this, and they were talking about how JPM was kind of the counterpart to take on the risk. What do you see in particular, like the chain solving in that instance, right? Like, all right, so you're going to cut out the middleman, but the piece of code in particular, what is it going to solve in this transaction, right? Can't you, if I'm remembering correctly, the nickel spreads kind of just blew out, right? And the liquidity was it was just in a liquid market overnight. And this is when commodities across the board were kind of just skyrocketing. What does a blockchain solve kind of to stop that malicious acting or to improve on transparency in those transactions?
Just no censorship. Like the
Okay,
exchange decided to rewrite the trades for the day, and you can't do that on a blockchain. I
gotcha,
think that was,
gotcha. Okay, so how does that spill into what Opyn's kind of doing in terms of building out DeFi options infrastructure? What do you see the pros of this being? What do you see the cons of it? What are just simple hurdles that all markets are when you're developing these?
yeah, I have the pro, and I think this LME example is, as people used to say, not your keys, not your coin. That if you have a centralized, you're putting money in custody with a centralized person, you're trusting them to behave in your interest. And that on a similar note means that there's no counterparty risk, that you're not exposed to, say, if you put your money with a broker, then it's possible that broker could lose the money through other trades. It's not completely segregated. So I think it's partly the ability to self-custody, being completely in control of both the assets that you hold and the contracts that you're entering into with those assets. I think that's the central thing for me. And of course, that it can't be censored after the fact.
Right. What do you see the biggest hurdle, the cons of kind of the blockchain and where it is kind of currently?
I see there are lots of problems with blockchain at the moment, and I think it's great that so many people are working in DeFi, because there are a lot of problems with DeFi, and there are a lot of things that need to be fixed, and there's a lot of intelligent attention that needs to go to these problems. A central problem is that a blockchain is like an extremely slow computer. It's like trying to trade on the Apollo 11 moon landing system, and this was, I mean, it's hilarious that the problems that people used to face with these very old computers, which had very little RAM, and you were constantly operating very close to the hardware, and we now have, again, many decades later, because we've created this incredibly slow but incredibly secure computer called blockchains, and that means that we can't, if you write anything for a blockchain, you have to be very careful about how you're writing it. Operations are expensive, and you can have it's a very fraught system. We haven't built the levels of abstractions and speed that we have for any centralized application, which is essentially just a database.
I would agree. I just wanted to quickly touch on, I think, yeah, obviously like the speed, it's like the scalability. And I would say that is like, there's like, I guess, some nuance to that. So obviously you have like the legitimate like scalability issue when you're thinking about like speed and when you're thinking about like the actual network. And then I would say when thinking about mass adoption, when we're talking about DeFi and we're talking about accessible systems, that like, you know, like almost like a web, like an internet revolution of sorts, like the next way, instead of a username and password, logging in with a MetaMask or your Rainbow wallet type of, you know, mass adoption. I think the scalability issue also becomes amplified because I think it's, at least still right now, like the UX UI for a lot, in order to access the blockchain, is still really kind of primitive. I think in a lot of ways, people, if you really are really very behind and open themselves up to a lot of security risk if they can't understand a transaction, what they're signing. And we've seen, you know, especially recently, like a lot of these different scams, et cetera. So I think a big issue is like the scalability and just how technical it really is. I think that there's still ways to go in abstraction so that it's easier for people to use and also safer.
So if security is already solved, and then the future and the problem that we're currently talking about is scalability, if you hear some of kind of the progressions of ETH over the next 6 to 12 months, some of that is scalability. Is this kind of where the future is going? How is that really going to impact DeFi as a whole? And even the market, because if I were to look at DeFi, this is almost very similar to before electronic systems came into traditional equities, traditional options, futures kind of markets, right? And so there was that latency that existed. How is that going to impact the DeFi markets, let's say over the next year to 2 years?
I think the biggest thing will be getting speed and scalability solved, and then building UX on top of it. That means you don't have to be thinking about, I'm interacting with the blockchain when I'm doing this trade. It should feel like when you do something on internet banking, you don't have this sense that you're interacting with a database and with whatever is sitting on top of that database. You're just like clicking on the thing, and the abstraction works very cleanly. The extractions for us, you can still see the spikes of DeFi things going on, and I think while that still happens, it's very difficult for people it adds an extra level of complexity to how you interact with it, and makes it more difficult for people to use it. That changing and cost changing because people are doing things on, say, like using rollups or similar mechanisms to scale so that you can have very fast, very cheap transactions, run things like exchanges without having to pay money in transaction costs. That will be hopefully where it gets to.
Yeah, that would be huge in terms of just the amount of volume that could come into the space then. All right, so if you guys are building the options infrastructure, can you talk me through Gamma and what kind of Gamma is on a high level, and then kind of bring it down to a layman's term for anybody that is unfamiliar with it?
Sure. So Gamma is a piece of some code that allows you to create European options and spreads on European options. So it's just a core piece of code which creates options that are cash settled. So options that you don't have to hold the underlying asset. You can just trade the cash value of the underlying asset against them. And that can be then used to build a whole bunch of other things. But that's what Gamma is.
Gotcha. And then to preface, there's a lot of like traditional finance people that watch this show. Gamma is in reference to Gamma protocol that's offered through Opyn. So that is the options infrastructure base layer that can be deployed. Okay. What are current use cases? What are the biggest use cases that you guys are seeing in terms of Gamma? Who's kind of using it? What is being used for it, and what exists in terms of opportunities for integration teams?
Yeah, I can take this, but I bet Joe could probably add on to it. At least, Gamma is, again, like a set of smart contracts. And so we've seen a lot of really interesting use cases. Like, for example, there's Ribbon Finance. They've honestly like execute their options through these Gamma contracts. So for example, they have like DOV-style vaults, like centralized options vaults. And then there's also like StakeDAO, which I believe is also built on top of Gamma. And so Opyn is very much infrastructure. Even when we start talking about Squeeth later, like Squeeth as a product can be viewed through the lens of an infrastructure product, and with people building on top of that as well. And I would say that the research team at Opyn is fabulous. And so they are very encouraging about people building things out and just seeing what can be created through this infrastructure that they have helped create.
What is the comparison Gamma protocol to like traditional space, right? So the clearinghouses, the exchanges, what do these smart contracts solve that would optimize kind of the transaction speed of trader to clearing?
So the exchange provides, I go onto an exchange, I make an offer, I put it in a price in a quantity in say an options market. and the exchange will deal with storing that order, figuring out how much money it needs to take from me that I need to put up in order to have that order live in the market, and when the option gets to expiry, figuring out who owes who money, and exchanging the money back and forth. It can be done by different layers from the exchange, but Gamma just does everything that would be done by the combination of the exchange, the custodian, and the broker for a traditional trade, and the various other levels of middle infrastructure, which always find their way into broker flows.
So in my head, then you basically took a whole operation from exchange to clearing to settlement and have automated it completely, right? So the overhead for these salaries, for these employees, on the clearinghouses, on the exchanges, it's much smaller now because everything can be automated. Is that a correct assessment?
Well, that's right. And even better, all the people who are employed in these slightly marginally productive middleware jobs can now get jobs in DeFi doing productive, useful things and contributing to the world.
I did see that DeFi is hiring multiple employees. It's so interesting to see kind of everything be a smart contract, right? And the types of innovation that's being created in DeFi through smart contracts. So let's touch on Ribbon. Let's touch on some of these kind of DOV styles, and we touched on like Gamma and how Ribbon's using it. What is this concept? How are they utilizing it? And then what is the accessibility to the world essentially?
So one way to think about it is you can use Gamma to create some options. And when Opyn as a company first made Gamma, what they noticed is that people had this flow where they would create an option, they'd put some collateral and then mint the option, and they would sell it. And they would sell it regularly. Every Friday, they would go and find somebody who they could sell this option to, and they wanted to have that as a strategy, and that took them a lot of time, and it was very difficult for them to. It took a lot of maintenance, and so they systematized this process by having another vault on top of it that handled the process of having an action, like creating an asset, selling that asset, marketing that asset to different people through some kind of a process, settling the assets again, and dealing with the collateral. So it was saw a use case for Gamma and created contracts which allowed people to do that. And now that's a big use case. They'll have an option strategy which involves doing something regularly and taking a series of actions, and they can wrap it up inside a vault. So we see a lot of interest to people, anybody who has an option strategy which isn't just doing one thing, which is doing something regularly, using these kind of vaults.
Is there anything in Gamma that when Gamma was deployed, it's very hard to think into the future and say, what are people going to use it for? Is there anything that's come up that's been quite unique in the respect that the team in general is like, wow, this is interesting, it's very innovative, and it is going to progress the finance space much further?
We've seen a lot of varied option strategies. There's a lot of complicated option strategies which people do in traditional finance, and people will try to port these over and use the vaults and use Gamma as a way to create a structured product. The thing about options, and I think this is probably why Opyn has such a focus on options, because you can build any other thing with options. Like if I want to, I can use options to build futures. I can use options to build event markets. I can use options to build any kind of shape of structure. And so if you add dynamic trading on top of that, then it allows you to really build any kind of process that you can imagine. So the space is huge, and we see people all the time. Largely, a lot of it's trying to bring traditional finance ideas like volatility selling into a DeFi context. But yeah, theoretically you can do anything. It's kind of like it's a bit like a Turing completeness that you can. It's an analogy to Turing completeness that you can construct anything. It's like a machine that can construct any other machine.
It's fascinating. It is fascinating. Okay, the quick question is then, I mean, Opyn has so many different things, option infrastructure, there's actively being a derivative that was built. Regan, I have a question for you. What is Squeeth?
Yeah, that's a great question. So I guess the high level 1 minute overview, and Joe, feel free to fill in any gaps, is Squeeth is a token that tracks the ETH raised to the power of 2. And so this token is actually an ERC20 token, which essentially allows someone to maintain and get access to this constant gamma exposure. And so the reason why Squeeth is super interesting is it innovates on like a perp swap, which is for futures, and then this idea of everlasting options, which we don't see in implementation, and really combines all that to create a product that like consolidates the option market liquidity into one instrument and gets rid of managing strikes and expiries. And also because it's a token, users can go long this token, and instead of paying an upfront premium, they pay something called funding, which is like essentially like the cost of their position, which is a paid in kind, so paid through via the Squeeth token. And then people are able to take the other side of that token through strategies as well, that Squeeth strategies. And so that was a bit wordy, but I guess the best way to understand Squeeth is this tokenized volatility exposure, this tokenized exposure to ETH that really you could never exactly replicate with like a replicating portfolio. It gets rid of so many of the nuances of traditional options that we see, like expiries and managing liquidity, and is super cute. And Squeeth stands for squared ETH. So that's the cute part of it. I guess you could say the token's cute too, but at least the name's very cute.
Fair. What are the use cases in terms of trader, right? So ETH squared, it sounds relatively complicated for anybody that's not terribly great at math or just doesn't like math in general. What are you guys seeing in terms of use cases? What significance does it have in the space? And we'll start there.
Yeah, I'll definitely pass this off to Joe, because Joe can speak more technically about it, as he helped create it. But I would say that there's so many different use cases that people are using Squeeth for. And I think that, it can be really integrated into someone's portfolio already, like however they, if they have certain exposure, people can, take essentially like a leverage bet with it. I mean, it's quadratic, right? So instead of like this like more linear price exposure that you'd have with like, let's say 2x ETH, you get more on the upside and also more limited protection on the downside, right? You have this convex exposure. And so also because it's an ERC20, people are able to build on top of it, hedge some Uniswap positions as well, which is more complicated if Joe wants to touch on that. I would say the ways to Squeeth are quite endless, and users every day are coming up with new ways to Squeeth. And so it's been really interesting that this incredibly decentralized product has been able to be used by many people who have done some very, very interesting things with Squeeth.
Nice. Yeah, Joe.
Yeah, absolutely.
Quick question then.
Go ahead. Well, what's one thing I thought to add, a very simple use case, and something which I think a lot of people have said that they use Squeeth for, is just to get a leveraged long exposure to ETH without having to worry about liquidations. A lot of the time we have ETH bulls. If people believe that ETH is going to go to a certain price, but if they try to put on an exposure with a perp contract, then they'll often get liquidated in their position, and ETH ends up going up as they predicted, but it's too late for them because they've been liquidated out of their position. And Squeeth allows you to get a leverage. One way I think people think about it is that you can get a very long position, and it becomes longer as the ETH price goes up, you get more and more exposure. It's the nature of a quadratic. But as a long ETH person, you can't be liquidated in that exposure. That I think is makes the most sense for, I think, for a lot of people.
That's super interesting. So question then would be, let's touch on Uniswap positions, right? So LPing Squeeth and kind of what's your exposure to the market in the Squeeth ETH pool? How can you use Squeeth to hedge a Uniswap V3 position? And then how does somebody, let's say, that's not just particularly speculating on ETH direction, use Squeeth to take somewhat of a more bullish stance, but use it against portfolio of options or possibly against just spot positioning?
Yeah, so we thought this I think is the math nerd side of Squeeth, which is very exciting, that you will find things that are related to Squeeth that you wouldn't think are related to Squeeth. And as you said, these two very interesting examples are Uniswap impermanent loss and options themselves. So with Uniswap, there's when you LP in a Uniswap pool, you get something like a curved exposure. So it's not like if ETH goes up $1, you make $1 kind of thing. You get some kind of like a curved structure, and that is expensive because it means as the price goes up, you make less, and as the price goes down, you lose more. And people experience this when they LP into a Uniswap pool, and they've come up with a name for it, impermanent loss, and it's a huge concern about how big this is, how to price it, and how to deal with it. One thing that Squeeth can do is you can hold a certain amount of Squeeth, and it will almost exactly offset this impermanent loss that you get in a Uniswap pool. Depending on how Squeeth is pricing, you can completely hedge your position and still receive some of the fees which are coming out of the Uniswap pool. So we put up a paper for this, and we found it's been a very popular idea for people to build vaults on, particularly people who have large Uniswap pools. Obviously, we're related to Uniswap by Paradigm, so we have a lot of interaction with them as well. So that's one thing. That's one thing which we think is very exciting. That AMMs in general have this problem that everybody knows about, and Squeeth is one thing that can hedge it. On a similar idea, all options at some level have inside them a sort of like curvy exposure, a quadratic exposure, which sits inside the options. And anybody who's traded options knows that option markets are dreadful to deal with in general because there's so much fragmentation, as Regan was saying, across all the different options, across all the different times to expiry and all the different strikes. Each one is their own little market, and those markets tend to be quite illiquid and they'll have large spreads. And part of the reason for this is that it's very difficult to hedge one option with another. You can do it, but it's very fiddly, and the exposure changes. You have to match what's called the gamma of one option with another option. Both gammas are changing, and the hedge doesn't work very well, which is why the options market doesn't work very well. Squeeth has constant gamma, so it has this one thing that all options have together. It has a known constant quantity of, and so you can use it as, I can have an option with one strike and one expiry, and a different option with a different strike and a different expiry, and I can hedge both of them using Squeeth. And what that means is that it's more easy for me to hedge a book of options or to make prices on options. And this, I think, this is a big motivator for us on the finance side to create this market and to allow people to think about and trade this market, because if it works properly, then it will mean that all the options markets can flourish and be hedged and have great prices from that. So hopefully that's really the solution. That's really what we're trying to get to and what we're trying to solve.
Okay. All right. What about using it as, let's say, pure speculation? Do you have not perfect examples, but do you have examples over the last bull run? And how a trader could take a speculative stance on directional risk in ETH using Squeeth?
Yeah, I mean, one way I think about it is you can square ETH. You just take the starting number and square it, and look at the ending number squared and see how that maps. So if ETH if ETH is at $10, then Squeeth is 10 squared, which is 100. If ETH is at $100, then Squeeth is at 10,000. If Squeeth is at $1,000, then Squeeth is at 1,000,000. So there's this huge ramp up in prices. So anybody who held Squeeth in a big run up in ETH would get that payoff. They would get that as ETH went from $100 where it was recently, then and Squeeth is worth 10,000 to $1,000 where Squeeth is worth 1,000,000, and up from there. So I think that's why people, if you're a mega bull in any market, then having a quadratic exposure like this is good, because it ramps you up and adds a zero every time you double.
I remember when I was doing a lot of research and didn't even know who Opyn was, and then I saw the article that was about if you would have held Squeeth during the last bull run, and then it was like a 40x return, and relative to like a current spot position, it blew my mind. And I feel like most traders that are in crypto are a little bit crazy, but are also in it because of volatility and asymmetrical returns to the upside, right? While also being the chance for liquidations and multiple different things. But the asymmetrical returns to the upside is incredibly interesting, as we've seen it time and time again since the inception of Bitcoin. So for that reason, I think it's very interesting to always have the knowledge of how to use Squeeth in a portfolio, right? What do you see? You touched on like liquidity being somewhat fragmented across option strikes. How does Squeeze solve this? You touched on it, but what is the kind of mechanics of why, and then how would, if it were to work perfectly in the future, what would that scenario look like?
In the perfect state of the world that we envisage for Squeeze, let's say that I want to trade an option. I want to trade a call option on Squeeth with a strike of 3,000 and an expiry in 3 months' time. Currently, if you want to do that, then you go to a market maker, and they'll quote you a price, and then they'll try to hedge that price. They'll try to hedge that either with a nearby option, or they'll just hold that risk on their book. And they will tend to, depending on how many options are trading around that area, they'll tend to have, they'll need to charge a spread, partly because they need to make money, and partly because they're worried that they're going to be taken advantage of by a person who's coming to quote their price. But essentially, the reason why they're able to quote this price, and the reason why there's a lack of competition, is because these options are so different. And so Squeeth allows the options to be considered on the same basis. That an option is just it's like a dish. You make it out of different components, and if you have all the ingredients for the option, then the price of the option will match the price of the ingredients. If you don't have all the ingredients for the option, then you don't know how much the thing's going to cost, and so you charge a lot for it. So that's one mechanism through which Squeeth can help the option, can fix this the central problem that everybody sees in option liquidity, that it's very difficult for people to find hedges for their particular options, so we get very high spreads. Another way is that sometimes people will trade options just because they want a leveraged long exposure. People will buy call options on a stock that they think is going to be great. If they think that a stock is going to 10x, it always makes more sense to buy a call option on it than to buy the underlying, because you get leverage, and you get more leverage as the price increases. So you can have these very, very large payoffs, very high conviction bets. Squeeth does the same thing. You can think of it like, in some sense, having a call option on the asset, and it actually behaves very similarly to a call option in the sense that it ramps up. Call option has the same thing. So from that perspective, people might choose just to trade in something like Squeeth. Doesn't have to be. I mean, Squeeth is for the ETH price, but it could be for anything. And they can use that as a way to get their leverage without liquidations, like you do with the call option, but in a way that you're trading in a pool with everyone else. You don't have to pay these large spreads to market makers.
Interesting. All right. And then how would you even go about pricing Squeeth fairly, right? From zero, which is no concept, to execution. What's the fair price of Squeeth, and how do you even go about that thought process of building out that idea?
Yeah, this is definitely the funnest part of the job that we do. And it turns out that it's actually a surprisingly easy problem. You would think that it's option pricing problems tend to be hard. And they all come down to this idea, a central idea that you need to be able to construct the thing that you want to price from other things that you know the price of. So it's this ingredients making a recipe kind of idea. And so if I can I know what Squeeth looks like. Squeeth is a squared exposure, which means it kind of like starts with a low slope and the slope increases and increases as it goes up. If I can find a set of options which give me that same exposure, then all I have to do is I know how much the options cost because I can look at the options market and see where they're pricing, and I replicate. I get all these individual options that I match the payout profile of Squeeth, and then I find what the cost of all those options are if I add them together in this recipe, and that's the price of Squeeth. And it turns out that because we know how Squeeth, we know the structure of the payoff of Squeeth, a quadratic, and we know all of the option prices that we can see and we can observe, we can get a price of Squeeth from the options market, and that is then the price, that the fair price of Squeeth from the option market's perspective. If you traded the Squeeth against the options, and it gives people an immediate sense of if there's an arbitrage, if the price is higher, if the correct price of Squeeth is higher than it's trading, then what you can do is take all the options. You can buy all the options and sell Squeeth and pick up a spread, and vice versa. So that's the replication gives people an idea of whether they can make money trading Squeeth against options, which is an idea that we very much want to encourage.
Interesting. All right. And then and you say encourage, right? And so you speak on arbitrage, which means that the market is inefficient currently, right? And it's seeking efficiency through these arbitrage. So by teams and traders being able to price these options and sell Squeeth, the market becomes fairly efficient, and the fair price of all options relative to Squeeth exist, right? That would be the solution then for?
Yeah, that's right. So what the price of Squeeth first of all reflects the price of the options, and then the price of the options reflect the price of Squeeth. Squeeth it's a bootstrapping thing where the Squeeth price is constructed from the options market, and then it provides a basis for the options markets to themselves price better. So options help us first, and then we help them. We return the favor by providing them with a hedging instrument.
Interesting. Okay, so Squeeth is the derivative. What do you do with this? What has the team done with this? I've seen a crab vault. What is crab? What is concepts here? Can you guys speak on to that?
Yeah, so Crab is an automated Squeeth strategy where users are able to deposit ETH into an automated vault that will essentially manage the position for them. And so Crab is called that because of a crab auction, and I'm sorry, because of a crab market. And a crab market is when the market moves in a sideways manner. So I know lots of clever little names going on within the Squeeth ecosystem. But what it does is it combines ETH and Squeeth, and it creates this neutral exposure to the price of ETH. So really, it's a short volatility strategy. It's a delta neutral to the price of ETH, and it's like taking a short vol position. And so that volatility, essentially the bet that it's making is that Squeeth, at least long Squeeth, is overpriced. They're taking the short side of it, but still not taking that directional exposure to ETH. And so the band that it's able to trade in to be profitable in USD terms is less than the volatility of Squeeth, which can be monitored on the Squeeth website. And essentially that's in between hedges, right? So within between hedges, if the price moves less than the volatility, the projected volatility of Squeeth, which, you know, historically when the auction was hedging every day was about like 6%. I think it varies, of course, based on market conditions. Then the strategy will be profitable. But it's also been an interesting use case in more bear market conditions where the strategy will actually end up stacking ETH. Because again, it's aiming to make dollar value, so it actually ends up stacking ETH. So then you're kind of like thinking a bit more like a, you know, interesting payoffs there as well. And so it's just this delta neutral vault strategy that people have found, that users have found incredibly interesting, and has been really fun. Like a good way to see product market fit with Squeeth.
When you say vault, what does vault mean? Let's say in terms that nobody's even familiar with crypto. It's a pretty widely used term in crypto, but what does it actually mean? What is a vault? What does it do? And what is it kind of disrupting?
Yeah, I mean, I suppose, Joe, you can correct me. I mean, really, like the vault is the smart contract, right? And that is storing this value. And so when we think of like, I think a lot of terms in crypto are used to try and connect to like very human things. Like there's been a lot of debate about MetaMask and Rainbow. Like, are they really wallets? Is wallet actually a good name for it? Does that only confuse people further? I think the concept of vault is just another way of personifying, like, you know, you think of like going in and like, you know, the big vault and like opening it up and just seeing a bunch of like ETH basically sitting in there. And I think almost still vault, like that protection being like in something that's decentralized, right? And that is like in this smart contract is the best way to like understand a vault. But so essentially it's just where someone can deposit their ETH, but also they have accessibility to it, right? At least with the Squeeth auction vault, like they're able to withdraw out of Squeeth anytime or deposit if there is capacity in said vault. So I think vault's just a good way to describe it. But Joe, maybe you have more nuance as to why exactly it's actually called a vault.
That I think is a very good explanation. A vault, I think the illusion is to like a vault where you keep things safe and that is difficult to open, which I think is something which is a desirable characteristic. I think of it as like the decentralized option vaults, they are just wrapping up a trade flow for people that you could do by yourself. You could go and use Gamma and mint some options and sell them and accept deposits from people and give them money back when they ask for it. Maybe you'd email them, but that would be very difficult and very cumbersome. And so the DOVs and what Ribbon does, and StakeDAO and many of our other people who build on top of us are systematizing that process. The crowd vault is a systematization of selling Squeeth. So selling options gives you ribbon vaults, and selling Squeeth gives you crowd vault. And those two things are closely related. Selling Squeeth is because Squeeth is very closely related to options. Selling Squeeth is like a very you can think about it almost exactly like systematically selling a certain amount of options. And why you would want to do that is because people will tend to overpay a little bit for options because they like the characteristics that options have. They'll price the volatility a little higher than probably is fair. And so by being on the other side of that and selling options consistently, you are providing a little bit of insurance. You're giving people this nice payoff that they like. That's useful to them, and it gives them this leverage and prevents them from being liquidated. And you can expect to receive a small return over time in the same way that selling options on equities will do the same thing.
I remember the first time that I saw a vault, right? So a decentralized options vault, and then even more of a centralized options vault or automated vault, right? Some of the light bulbs started clicking, and it was incredibly disruptive in terms of what is being built and the accessibility to anybody to be able to kind of have access to these traditionally kept secrets, right? I mean, some of these are put selling covered calls. Those are very very well known, but some of them are somewhat complex, right? So delta neutral strategies are a little more complex, and having the accessibility is huge in my head. Can you guys talk about like the disruption that this creates and possibly the forced adaptation from traditional finance?
Yeah, I mean, there are a lot of people, it's a very common strategy. As I said at the start, I came from an options background, and the main thing that we did, like the core of the options business from the trading side, is selling options and trying to hedge them and trying to make money that way. And you have to have a surprising amount of infrastructure to do this. It's very difficult. As a person, it's very difficult without going into a complicated hedge fund which is itself a huge hassle, and you have to pay a lot to go in and go out, and you never really know what's going on inside those things. This is something which anybody can not only get into easily, but make themselves. They can go and construct the exact same thing if they think that a particular bot isn't doing something the way that they would want to do it. Then they can construct a strategy which really is just pretty much just available to institutional funds. It's very difficult to do anything like this in traditional financial markets and trade it themselves or make it themselves.
Right, right. What about in terms of creating the auctions kind of? I saw Crab V1 went into Crab V2. There's a new auction dynamic. There's bidding off chain and then settling on chain. How does that go about being built? And what does that kind of optimize for the user?
Yeah, so the one thing that the Crab Vault has to do is to become delta neutral. Delta neutral means that you try to reduce as much as possible your exposure to the ETH price. You exchange some ETH for some Squeeth, and you move to a point where you've got a quadratic payoff, and you're not on one side or other of that. And in order to do that, it needs to trade. So it can trade. There's a couple of possible ways it can do that. It can trade with the Uniswap pool, but so if you have a very large vault, then trading a large size into a Uniswap pool will be expensive. Will cause money. It will cause in slippage. And so we have a mechanism in the contract that anybody can come and offer to buy or sell Squeeth to the contract 3 times a week when it needs to trade. And in doing so, everyone can see everybody else's bids. They can bid on a competitive basis, and the auction will select all of the best bids that give the target trade that the auction needs to do, which is to trade some ETH for some Squeeth, in order to have its hedge operate correctly. So it's kind of like a more decentralized version of what, say, Ribbon does when they go out to market makers, and they'll say, well, we'll go out and find a bunch of market makers and get them to trade. We just have an auction that anybody can come in and participate in at any size, in order to get Crab to where it needs to be 3 times a week.
Oftentimes you hear the crypto and DeFi in particular is incredibly expensive to transact. What is the argument to this, and how are teams going about working around this idea?
I think so much trade happens on AMMs like Uniswap or Curve, and that's because it's been the great innovation of DeFi to find ways to not need to have a limit order book where you have lots of different bids and offers which then match, because those things people have to really pay attention to, and you have to have it's a high cost of monitoring. And the AMMs are great because you can just create a Uniswap pool and anybody can trade, but they're bad because if you put a large into a Uniswap pool, it's going to shift the price back and forward. And so there has to be there are improvements that you can make. UniV3 was a huge improvement and fixes a lot of problems. But there's still going to be a sense that if you want to do a large trade and you're just on AMMs, you're going to pay large spreads. And so augmenting a market which exists in an AMM with an auction mechanism and with similar kinds of mechanisms means that there's at least a possibility for people to trade at better prices than Uniswap, and to do so in a way that somebody else can easily come on the other side of those trades, or maybe people have opposite trades that they need to conduct, and they can both participate in these kind of auctions. And so this allows people to do that. If you really need to do large size, or if you don't want to trade with the slippage of the Uniswap pool, then you can trade in these auctions. So we think that that's at least one solution to this expense, this slippage problem that we all have.
Right. All right. Well, it's been almost an hour, and we could probably talk about this all day. But the last 2 bits before, let's open it up to 5 minutes, maybe a questions at the end. But do you guys have any alpha that you'd like to discuss or future developments? And then we always kind of open it up for any promo that the Opyn team wants to do. So.
I think, well, the Squeeth is just a first step, I think. I mean, when you really think about the power of Squeeth, the power of perpetual, what it is, like it's like this perpetual exposure, the power of when you think about like ETH squared, I think there's a lot of different ways to both tokenize exposure, and just, this is obviously thinking way down the line. I'm not personally on the engineering team, but I think we're incredibly excited for hopefully more strategies to come that accommodate more markets. So there'll be more information soon about that, and just continuing to build out this like Squipto ecosystem, if you will, where maybe not even everything has to be squared. There's so many different types of exposure that I think Squeeth and is incredibly capable of, but even beyond Squeeth. And so Squeeth has been very incredible to learn about. And so I'm very excited to both learn more and then see what the engineering team is up to. Joe, if there's anything that you want to add.
Yeah, there's a lot of things that we're looking at. We obviously hope that people will do things before we do and build on top of Squeeth themselves. But I think being able to create something like Crab Vault that allows people to be long at the same time, so they're picking up volatility premium and option selling while being long ETH, is something we think that will be very useful for people. Being able to trade Squeeth versus options directly, the Squoptions Vault, as we call it, which allows people to do that arbitrage, but have the arbitrage done by a vault rather than having to do it manually, is something we think is interesting. Being able to trade impermanent loss of a portfolio of Uniswap LP positions against Squeeth is another thing which we think could be vaultized. And the super secret alpha, the final plan, the bottom of the drawer, completely top secret idea is that we go from Squeeth, which is squared, to any power. So we can have half power, a power of 1, a power of 0, a power of 5, any power to have a continuum of these powers, which gives you a far more flexibility in what you trade. So that's the dream of the full Squeeth ecosystem, as Regan puts it, is to extend this out from a single power of 2, which is our starting point, to any power.
Yeah, I was going to ask about that, but I didn't know if you guys could speak further on that. All right, so let's open it up to questions. If nobody kind of hops in, then I don't know if you guys want to give a promo, or if you want to leave that towards the end, or what are you guys thinking there?
Yeah, obviously if anyone has questions, definitely feel free to ask and interrupt me. But I guess I will promote the Twitter. I think it's probably the funniest Twitter in DeFi. And that's not just because I'm behind it, but mostly is. So if there's a funnier one, you can totally let me know, but I haven't yet to find it. You'll see lots and lots of memes about Squeeth, hopefully also just stay up to date with the latest Squeeth content, and I think it's very and everything that Opyn is building, and hopefully some very interesting announcements in the coming weeks. So I definitely recommend following that, and just keeping in contact with us. And we also have the Discord in our bio, where you will actually see Spencer hanging out quite a bit, the incredible host for today. So if you ever want to bother Spencer, he will be somewhere in the Opyn Discord.
I'm around everywhere. I'm never out for this desk. So it looks like there's no chat or no questions. So let's wrap it up. Thank you guys for hopping on and talking for an hour.
Absolutely. Thank you for having us.
No worries. It's been wild.
See ya.
Wild.